You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Wednesday, April 17th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story of the day is from investing.com. It's the top 5 things to know in the market on Wednesday. The first thing to know is China's economy grows at 6.4%, dampening slowdown concerns. China released a deluge of better than expected economic data overnight, easing concerns over the slowdown in the world's second largest economy. Gross domestic product grew at 6.4% in the first quarter, a touch better than the 6.3% forecast by economists. Industrial production and retail sales also increased more than expected in March, suggesting that the economy has momentum going into the second quarter. In reaction to the news, prices on safe haven sovereign bonds fell, pushing yields on the U.S. 10-year Treasury and the comparable German Bund to 1-month highs. Stocks in Europe rose, as did commodities such as crude oil and copper. Analysts did warn, however, that it was too soon to predict a sustainable turnaround, suggesting that Beijing would need to provide further fiscal stimulus to support growth. The second thing to know today is IBM and Netflix earnings strike the wrong notes. Tech earnings released after Tuesday's close were set to dampen investor sentiment on Wednesday, fueling fears of a first overall decline in quarterly profits from S&P 500 firms since 2016. IBM fell 2.6% in pre-market trade after reporting a bigger than expected decline in revenue, casting fresh doubt over its cloud-based turnaround strategy. Netflix also dampened spirits after its forecast for second quarter earnings missed analyst expectations. Shares were off 1.2%. The financial sector will remain in focus Wednesday, with Morgan Stanley and U.S. Bank Corp reporting ahead of the open. PepsiCo and Kinder Morgan are also due to report later. The third thing to know today is U.S. futures are higher ahead of Zoom and Pinterest IPO pricings. U.S. futures pointed to a higher open as the positive economic data from China boosted risk sentiment. That's pre-open. 2 of the year's biggest IPOs to date, Pinterest and Zoom, are expected to price after the close ahead of their stock market debut on Thursday. Zoom, which is already profitable, was reported to have raised its price band due to higher than expected demand, while Pinterest appears to have had more difficulty attracting investors, setting a valuation range below that of its last private funding round. With U.S.-China negotiations in the background, economic data on U.S. trade figures will deserve attention when released at 8:30 a.m. Eastern. On average, economists expect that the U.S. trade deficit widened to $53.5 billion in February, according to forecasts compiled by Investing.com. Also on the calendar, St. Louis Fed President James Bullard and Philadelphia Fed Chief Patrick Harker are scheduled to speak on monetary policy and the economic outlook later on Wednesday. The fourth thing to note today is Qualcomm jumps on settlement with Apple and Intel receives a boost. Shares of Qualcomm soared 6% in pre-market trade Wednesday after it reached a surprise settlement with Apple that will force the iPhone to once again use the company's modem chips. Intel, which had supplied chips for the iPhone after Apple's rift with Qualcomm, announced later that it would exit the 5G smartphone modem business. Markets applauded the decision to abandon a high-cost investment, pushing the shares up 2.6%. And the fifth thing to note today is oil prices get China boost ahead of expected crude inventory draw. Oil traded higher on Wednesday as the upbeat Chinese data boded well for crude demand, and attention shifted to official U.S. government data on inventories. U.S. crude oil futures gained 42 cents or 0.7% to $64.47 by 5:36 a.m. Eastern, while Brent oil rose 39 cents or 0.5% to $72.11. The U.S. Energy Information Administration will release weekly data on crude oil inventories at 10:30 a.m. Eastern, amid expectations for a draw of 1.2 million barrels, in what would be the first decline in 4 weeks. The American Petroleum Institute data released Tuesday, although not perfectly correlated with the EIA's report, showed weekly crude stockpiles fell by 3.1 million barrels last week. In a related story on global trade from Investing.com, EU goods trade surplus with the US grows and deficit with China widens. The European Union's trade surplus in goods with the United States increased in the first 2 months of 2019, while its deficit with China widened, figures that could increase global economic tensions. The European Union's surplus with the United States grew to 21.6 billion euros in January and February of 2019, from 20.9 billion euros in the same period of 2018. EU Statistics Office Eurostat reported on Wednesday. With China, the EU's trade deficit expanded to 37.8 billion from 35.5 billion euros. The United States has hit the European Union with tariffs and threatened more in complaints over the trade deficit, the trade balance. Both Washington and Brussels have also complained that China wants free trade without playing fair. Overall, the goods trade deficit to the 28-nation bloc increased 28.4 billion euros in Jan and Feb of 2019 from 20.7 billion a year earlier. Big difference. And our final story today is from CNBC.com. Weekly mortgage applications for home buyers hit the highest level in 9 years. 2 weeks of rising rates are taking their toll on homeowners hoping to refinance, but home buyers are not pulling back. Mortgage applications to purchase a home rose 1% last week from the previous week and were 7% higher than a year ago. Purchase applications reached their highest level since April of 2010. Total mortgage application volume decreased 3.5% last week from the previous week, according to the Mortgage Bankers Association's seasonally adjusted index. Volume was 14% higher than a year ago. Applications to refinance a home loan brought the total down, falling 8% for the week, but still rising 26% from a year ago when interest rates were higher. And that, ladies and gentlemen, is news you can use for today, Wednesday, April 17th, 2019. Your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great day.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.